Hi. Let's learn about Lockbox banking. Lockbox banking is a service provided by banks to companies for the receipt of payment from customers. Under the service, the payments made by customers are directed to a special post office box instead of going to the company. The bank goes to the box, retrieves the payments, processes them, and deposits the funds directly into the company's bank account. For businesses that receive a large volume of payments or large denomination checks accompanied by remittance documents, a lockbox arrangement can streamline collections and payment processing. Utilizing advanced lockbox technology, banks have established multiple communication hubs for businesses to use to receive payments and deposits. A business establishes a post office box to receive payments from customers. The bank couriers the day's deposits and communications to its processing center. The business's remittance documents are scanned, payment information is captured, and clearing updates are transmitted to its accounts receivable. Each night, the business's lockbox data is backed up for secure storage and easy access. There are a number of costs to consider when pursuing lockbox banking. Some of these costs may include but aren't limited to: as with most payment processing services, there are both pros and cons to lockbox banking. It provides companies with a very efficient way of depositing customer payments. This is especially beneficial if a company is unable to deposit checks on a timely basis or if it is constantly receiving customer payments through the mail. Lockbox banking also enhances payment security by minimizing the handling of physical checks and reducing the risk of loss or theft during the payment collection process. Banks have robust security measures in place to protect payment information and funds. Therefore, using lockbox banking may reduce lost, stole, or misappropriated funds. Lockbox banking services often provide businesses with detailed reports and information about each payment received. This consolidated view of payment data simplifies reconciliation and provides businesses with valuable insights into their receivables. Plus, many lockbox banking services offer integration with accounting software, allowing for seamless reconciliation and automatic import of transaction data. Regarding both of these 2 points, lockbox banking may simplify the accounting process. On the other hand, lockbox banking can also be very risky. Bank employees who have access to lockboxes are rarely supervised, which opens up the situation to possible fraud. The fraud primarily occurs in the form of check counterfeiting, because the checks that are in the lockboxes provide all the information needed to make duplicates. Lockbox banking is usually not free, as the service typically come with fees charged by the bank. These fees can vary based on factors such as transaction volume, processing requirements, and additional services. Businesses should carefully assess these costs to determine if the benefits outweigh the expenses. There are several risks relating to the specific bank in which the lockbox is being held at. The efficiency and accuracy of lockbox banking rely on the bank's performance. If there are delays, errors, or disruptions in the bank's processing, it can impact the speed of fund availability or create complications in reconciliation. Last, while lockbox banking can handle traditional paper checks and electronic payments, it may not cover all payment methods or channels. A safety deposit box and lockbox banking are 2 separate financial services with different uses. By offering a specific address for clients to send payments to, lockbox banking primarily focuses on expediting the accounts receivable process for businesses. A safety deposit box, on the other hand, is a secure storage space offered by banks for people to protect valuable objects, papers, or assets. Though both are meant to provide consumer protection, they are vastly different that don't necessarily overlap in functionality. Lockbox banking focuses on facilitating payment processing and improving cash flow for businesses, while a safety deposit box serves as a secure storage solution. Lockbox banking is transaction-oriented and aimed at optimizing financial operations. Meanwhile, a safety deposit box is primarily for physical storage purposes and not necessarily meant for daily operations. Businesses using lockbox banking can substantially lower their internal processing costs, speed up collections, and convert their receivables into cash more quickly. There is no need for businesses to prepare their own bank deposits or maintain accounting records because that is done automatically through lockbox banking. In this manner, companies often turn to Lockbox banking to reduce their days receivables outstanding to ensure checks are deposited as fast as possible. Part of the Lockbox processing is done on a daily basis, so businesses can also increase their internal control and efficiency in receivables management while improving audit controls and data security. Businesses benefit from enhanced reporting capabilities with daily access to deposit amounts, fund availability, and payment information, including electronic images of processed payments and coupons. In addition, physical checks may not linger undeposited for as long. Lockbox banking can be beneficial for businesses of all sizes, including small businesses. It helps small businesses improve their cash flow by accelerating the collection and processing of payments, allowing them to focus on core operations rather than manual payment handling. Yes, there are different types of Lockbox banking services available to meet varying business needs. Some common types include wholesale lockbox for high-value payments, retail lockbox for lower-value payments, and electronic lockbox for digital payment processing. To reconcile lockbox transactions, businesses can use the information provided by the bank in the form of reports. These reports typically include details about each payment received, such as the payer's name, amount, and invoice number. By comparing this information with their own records, businesses can easily reconcile their accounts. Yes, many Lockbox banking services offer integration with popular accounting software. This integration allows businesses to streamline their payment reconciliation process by automatically importing Lockbox transaction data into their accounting system. Lockbox banking is a service provided by banks to help businesses streamline their accounts receivable process. It involves directing customers to send their payments to a designated Lockbox address where the bank collects and processes the payments on behalf of the business. Lockbox banking offers benefits such as faster access to funds, improved cash flow management, and reduced administrative tasks. Here are 4 key takeaways. 1. Lockbox banking is a service provided by banks to companies for the receipt of payment from customers. 2. There are pros and cons when it comes to Lockbox banking. While it is convenient, it can also be risky and lead to potential fraud, like counterfeiting. 3. Utilizing advanced Lockbox technology, banks have established multiple communication hubs for businesses to use to receive payments and deposits. 4. Businesses can use Lockbox banking to lower their internal processing costs, convert receivables into cash quickly, and speed up collections. Hope this would help. Thanks for watching.